Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about China Power International Development Limited, latest report. China Power International Development Limited offers a diverse range of businesses and services. At the core of its operations are power plants, which it develops, constructs, owns, operates, and manages in China and internationally. The company's electricity generation capabilities span various sources, including coal-fired, hydro, wind, photovoltaic, natural gas, and environmental power plants. In addition to electricity generation, China Power International Development Limited provides a range of services that support its operations and contribute to the development of new energy resources. These include energy storage solutions, green power transportation, and energy solution services. The company also offers logistics services and technical expertise related to electricity generation. Furthermore, China Power International Development Limited invests in new energy power resources, positioning itself as a key player in the transition towards cleaner and more sustainable forms of energy production. Its comprehensive suite of businesses and services enables it to play a significant role in meeting the growing demand for electricity while promoting environmental sustainability. China Power International Development Limited market capitalization of 41 billion is materially smaller than most of its industry peers of roughly 63 billion. China Power International Development Limited trades at a lower price-to-earnings ratio of 11 times and a lower price-to-book ratio of 0.65 times relative within the industry. This suggests a potential market detachment, as China Power International Development Limited trades at discounted levels, while the broader industry remains fairly valued, warranting deeper fundamental analysis. The leverage on the balance sheet appears elevated, with liabilities of 68% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The company have a dividend yield of 5.45%. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline can be identified through an analysis of the key sectors contributing to these changes. Revenue growth is primarily driven by the expansion of renewable energy sources. The increase in wind power electricity and thermal power electricity has been significant, with growth rates of plus 7.78% and plus 19.5%, respectively. Additionally, the introduction of new segments such as energy storage revenue has contributed to a substantial growth rate of plus 1,000%. Other income and services provided by the company have also seen an increase in revenue. On the other hand, revenue decline is largely attributed to the decrease in hydropower electricity and wind power electricity. The thermal power segment has also experienced a decline in revenue. Furthermore, energy storage revenue has seen a significant drop of minus 41.04%. The company's financial performance is a notable aspect of its overall success. One key indicator of this is the generation of positive operating cash flow. This means that the company is able to generate more cash from its core business operations than it spends on these activities. According to the provided sources, the company has consistently demonstrated this ability in recent years. For instance, as stated on page 6 and page 44, the net cash generated from operating activities for the period between January 1, 2025 and December 31, 2025 was a significant RMB 18,518,055,000. This substantial amount of positive operating cash flow is a testament to the company's efficient management of its resources and operations. The generation of positive operating cash flow has several implications for the company's financial health and future prospects. It allows the company to invest in growth initiatives, pay off debts, and return value to shareholders through dividends or share buybacks. Overall, this trend is a positive sign for the company's long-term sustainability and success. The company's debt level and interest expenses have undergone significant changes over the past year. Initially, the debt level increased from RMB 232.9 billion in 2024 to RMB 249.5 billion in 2025, indicating a rise of approximately 7%. However, upon closer inspection, it appears that there was also a decrease in debt level by RMB 6,238,630 from RMB 28,283,619 to RMB 22,044,989. Despite the mixed signals on debt levels, interest expenses have shown a consistent increase. The company's interest expense on bank borrowings rose by 3.7%, while interest expense on other borrowings increased by 5.8%. These increases suggest that the company is paying more to service its debt, which may be a concern for investors and stakeholders. Overall, it seems that the company's debt level has fluctuated over the past year, with both increases and decreases reported. However, the interest expenses have consistently risen, indicating a potential increase in financial burden on the company. The performance of various segments in the company's operations can be analyzed based on revenue and results. In terms of well-performing segments, photovoltaic power electricity stood out with significant revenue and profit/loss figures. On page 11, it generated $12,650,926 in revenue and a profit/loss of $2,944,102. Similarly, on page 13, it recorded RMB 11,737,415 in revenue and RMB 4,922,634 in results. Thermal power electricity also performed well, with substantial revenue and results figures. On page 11, it generated $19,499,332 in revenue and a result of $2,876,274. On page 13, it recorded RMB 24,268,883 in revenue and RMB 2,552,806 in results. On the other hand, wind power electricity and hydropower electricity were poorly performing segments. Despite generating some revenue, their results were significantly lower compared to photovoltaic and thermal power electricity. Wind power electricity generated $4,774,606 in revenue on page 11 and $1,425,243 in results. On page 13, it recorded RMB 4,806,371 in revenue and RMB 1,482,769 in results. Hydropower electricity also struggled with lower results despite generating some revenue. On page 11, it generated $9,800,281 in revenue and a result of $3,074,241. On page 13, it recorded RMB 9,491,881 in revenue and RMB 3,694,125 in results. Management's commitment to shareholders. The company's management has expressed its commitment to delivering enhanced returns to shareholders. A key indicator of this commitment is the increase in the dividend payout ratio, which has risen from 60% in 2024 to 70% in 2025. This significant increase demonstrates the company's focus on rewarding its investors and providing them with a higher return on their investment. That concludes the financial summary for China Power International Development Limited. Feel free to comment below, and I will be happy to answer them when possible.